Trump tariffs have pushed international trade to the edge. Amidst all this chaos, while most firms battle for survival, some will become unlikely victims. Hi, I'm Tarun Dukanyo, and today I'm going to talk about 5 firms that might just come out of this trade war as unlikely winners. With that said, let's get into it. First up, we have GSPL and Gujarat Gas. You can pick either of the two. See, India is now starting to take petroleum products from the US as well. And odds are that India will have to reduce tariff on these petroleum products. If that does happen, guess which companies' input costs go down? All the gas distribution companies. And the reason I'm picking up GSPL and Gujarat Gas is because their network is basically a vertically integrated company. There is also an impending merger for these companies, so it's likely that there might be a deep value unlocking happening here. Next up, we have Dixon Tech, and this is a slightly complicated play. See, as such, Dixon Tech should suffer because tariffs would make exports tougher. But the problem here is that for India, the exports get slightly tougher, whereas for China, these same exports get very, very difficult to make. And that in turn means whatever China exports the most of to the US will now flow from India. That might take 6 months to happen, that might take a year to happen, but in the long run, that's a big benefit to India. And one of the biggest exports from China to the US is, you guessed it, electronics. And Dixon Tech, hands down the leader in the country. So I would take this stock not in the futures, not for a trade, as long-term investment, ready to buy into dips as far as the dips may go. And on a similar line, we have PI Industries, and this is now an agrochemicals focused company. And again, agrochemicals is one of the biggest exports from China to the US, which means again this should be rerouted to India, wherein PI Industries has a moat that is basically unbreakable. It has been a consistent compounder as well, so I have no doubts that this firm should do well going ahead, even if these tariff plays do not work out. Just as a firm itself, this is a fundamentally very strong company with the potential to still be a multi-bagger from here. Next, we talk about GR Infra, and this is a different angle to how the tariffs may play out. See, it is likely that if the tariffs go the bad route for India, then the Indian government would have to foster our GDP some other way. And what other way is there than capex? Capex is mostly spent upon infrastructure, which in turn means that public infrastructure companies should do really well. And by public infrastructure companies, I do not mean PSUs, I mean companies that focus on public infrastructure, and I would like to stay with private players in that, wherein GR Infra is hands down the biggest player. It's also available now at a single-digit price-to-earning multiple, so as far as valuations go, there is no concern there. We also have Mr. Nitin Gadkari standing at the helm of all of these projects, and he is known to be a man of integrity, so I'm not worried about payouts not coming in as used to happen 10 years back. So in public infrastructure firms, which includes PNC Infratech, which includes KNR Construction, I'm very bullish. I would pick GR Infra simply because it's the largest in scale and it is available at a very, very cheap valuation. For the same reason, I also like other agri-focused stocks like Kaveri Seeds, Dhanuka Agritech, Chambal Fertilizers, even though Chambal is a little overvalued right now. But I would stay invested in these companies, at least not sell right now. The idea being that if India's GDP is supposed to grow from anything other than exports, it has to be agriculture. Finally, we have Mankind Pharma, and this company is my only pick from the pharma sector. The idea being, pharma is very devalued right now because of this tariff situation. So it's likely that if something horrible does not happen in this next week, then the pharma stocks might show us a rebound. And in any case, Mankind is a domestically focused company. More than 90% of its business is domestic. So even if the tariffs do take a toll, Mankind Pharma would be the only pharma play that survives. And remember, there are going to be these firms, these investment firms that always diversify. They would want to be invested in a pharma company in India. And then you have no other choice but to go for Mankind Pharma as the biggest play in domestic pharmaceuticals.